The LAMMA Innovation Awards have become a regular feature of the show, and this year is no different. Proudly sponsored by Rural Asset Finance, the awards have been recognised and rewarded innovation and advances inside the agricultural industry. Celebrating new technology and providing exposure to agricultural manufacturers, the awards provide winners with extensive media coverage across the AgriConnect platforms, including here at LAMMA, Farmer's Guardian, and other leading farming titles. We'll shortly be joined by two of our worthy winners to discuss their awards. But first, we're joined here in the studio by Matthew Smart, founder and director of Rural Asset Finance. Welcome, Matthew.
Good afternoon.
How are you finding LAMMA?
Oh, it's lovely. It's great to hear the buzz and see all the people turning out.
40,000 people. It's going to be an absolutely packed show, I think.
Yes.
That's really good. So tell me, why is it so important for you and your business to sponsor the LAMMA Innovation Awards?
Well, we've always known farmers are good innovators, but we're very interested now with the technological advancements required in agriculture, the precision farming, and also the sustainability angle as well. So there's lots of good reasons for farmers and their supply chains to be innovating.
There certainly is, and we certainly have been impressed, but I imagine you've also been really impressed with the standard of entries.
Yes, yeah, we've been really impressed. All of the gold winners I thought were worthy winners within their categories. I judged, or was part of the judging for the Digital Innovation Awards, and the Rain Dancer app that won that was a worthy winner and has actually solved a really age-old problem in farming of irrigator management. So water being sprayed in areas where it's not required and irrigators being left for long periods of time. Water management is part of that. And so it's a great, simple product. How have we done without it for so many years? And there is a sustainable angle to it as well, because it will make it more efficient. So
I think the importance of the awards is that you're actually now getting people targeted at problems and coming up with ideas, and
yes.
So much of research needs to be targeted in order to answer your question.
Yeah.
We've now asked the question and someone's come up with a brilliant answer, haven't they?
And Brian Knight Farm Machinery, winning the overall innovation award, again, highly deserved. That product hits the sustainable boxes and also precision farming. So it's directing chemical through each individual nozzle onto the ground in the right place.
So no spoilers. We've got Knight Farm Machinery coming on a little bit in a wee while, so we can hear all about it.
But a worthy winner, and really exactly the reasons why we're involved in this award.
Oh, that's cool. When you say we, of course, you mean Rural Asset Finance, your business. So tell me a little bit about the business.
So Rural Asset Finance, we're a group of either farmers' sons or people involved within running farming businesses come together. We're a direct lender to UK agriculture. We use pension fund and insurance company funds, so we're deploying that direct into farms, as well as bank funding. So we're trying to take a more private banking type old-fashioned approach. We feel farmers and banking are drifting and it's turning into algorithms and computer says no type scenarios, and that doesn't help farming. We're from farming background, so we know that approach by lenders doesn't suit the farming industry.
So relationship management is?
100%. Relationship management is really important to us. We'll go out, see the farmers at their farms, understand the whole business, because at the moment, they're old systems, BPS being phased out very rapidly, the increase in labour costs and the national insurance burden that we're all now going to feel. So there's immediate cash flow issues coming for the farmer. He's trying to remodel his future business. So analysing the last 5 years' accounts with BPS subsidies is not really a true reflection on where this guy's going in the future. So you need to get your head around lending to a future business model, not a historic one, and to do that, we think we're coming back to backing the owner of the business. That seems to have gone out of banking, where local bank managers knew their borrowers and they could back the individuals to produce a profitable business and repay their loans.
I absolutely get that. It's a wonderfully old-fashioned, new light through old windows kind of way of looking at it. So Is your own personal? You said you're from a farming background.
Yes.
Are you a banker as well historically? Or?
I'm historically I'm a farmer's son. Too many sons in the business, so I stayed at college and went into banking. So poacher come gamekeeper, effectively. My family are running farms back 5 generations in Cambridgeshire, but there just wasn't a place for me on those farms.
And do you think that personal touch and the fact that you and your teams have got a sort of deep knowledge and link with the countryside and farming is what makes you different?
I think it is what makes us different. Yeah, we know we need to go out to the farm and understand the whole business and the individuals that are involved. The other thing I've been a pioneer of is we don't outsource anything. So we have our own internal credit teams, employed members of the team. We have our own legal team, employed members of the team, our own valuation team. They're all employees, so we're not outsourcing anything. And I think where other lenders have gone wrong is they outsource too many services, and then that slows down the process. So keeping everything in-house speeds the process up, and we can prioritise things. So if there's deadlines coming to us from borrowers, we can move our workload around to suit those, because everybody's working is pulling in the same direction.
And in the client's interest, I get that. And have you recruited sort of best-in-class people from your valuers, from legal firms,
Absolutely,
et
yeah. Yes, we've got a mix of experience and youth. So we've got people with long 30, 40-year careers in credit underwriting and legal processes, but also we've tried to recruit young innovators as well, with the enthusiasm that's required.
Yeah, definitely. So what sort of things do you fund?
We fund a whole range of assets, large and small. We support traditional food production, so all the kit you see here at the show, we love financing that. Small pieces of equipment can make a huge difference to an average farm, and we've got some good examples of that, right up to completely new income streams, so diversifications, complete switches in farming practice. So multi-million pound deals down to 20, 30,000 pound deals.
So there's the smallest lot sizes, some tens of thousands, and you go up to...
We go up to about 5 million per customer, which could be buying a whole neighbour's farm out, or a completely new diversification, a big renewable energy project, for example. A prime example is just this month we've funded a hydro water turbine for a flour mill in Dorchester. So it's an old flour mill, was on the farm, basically derelict, and we've put a hydroelectric generator into it. That's powering the mill and the rest of the farm, and they're now producing flour for artisan bakeries all around the Dorchester area from this old flour mill, which was a derelict building.
So I'll be slightly careful what I say now, because I live in a water mill, and
right.
it's one I inherited from my father, and he, in the 60s and 70s, looked at power generation, and I am too. So
right.
I might well speak to you off camera about how that business model works.
But that turbine was a £50,000 investment, and that has completely revolutionised that mill, brought it back into use, and has created a diversified income stream for the farm, for the arable farm as well.
And sufficiently robust, obviously electricity prices are high,
yeah.
Robust when they go back down again as well,
yes,
I imagine.
Yeah. No, the repayment term on that is typically 5 to 7 years. So well within the technologies, those turbines last for 30, 40.
So like I say, 25 plus, aren't they? So
a lot of time.
Oh, that's good. Well, I'll definitely have a word with you offline about that one.
Yeah. So we do, I mean, equestrian centres, farm shops, glamping sites, all sorts of diversifications, and because we're a national finance company, we're seeing different projects successful in different parts of the country. So
it's interesting because you're called rural asset finance, not farm asset finance, and so actually it is a landowner in the countryside
yes.
who is your prospective client. Is
absolutely.
that right?
Yes.
And that's and in terms of the a simple farm acquisition for a farmer to buy the next door farm, you get a valuer in. I'm a chartered surveyor myself, so I understand how that works.
Yes.
That's fine. But something like glamping, that's a very different business model, isn't it? It's on a turnover basis. How do you internally? I'm just,
Yes.
sorry, we're going down a rabbit hole here. But
No.
it's fascinating. How does that get valued? How does you assess a business plan? I assume, do you? Or?
Absolutely, and often we're out on the farm helping the farmer build his business plan, because we've funded these types of projects all around the country for the last 5 to 10 years. So we've probably got experience and knowledge. We know where the pitfalls are and the mistakes are made. So often it's driven by an initial planning permission, how many units can be put up. We then get an agent in, so we advise for the first 2 or 3 years an agent is used to get the usage up and get the place known to the general public.
What sort of agent? Sorry,
a holiday agent.
Oh, okay. Sorry, like a letting. Yeah, I'm with you. Yes.
Yeah,
okay.
yeah. That helps to get an initial wave of bookings in, and then it tends to, after 2 years, self-populate itself. So people return, and also they tell their friends, and there's Facebook and social media, etc. So we're helping with that. We start with a very low utilisation level and structure the finance over a slightly, a longer period than maybe is necessary. And then as momentum builds, we have the ability for people to repay loans early without penalty.
Which everyone likes, right?
Absolutely.
So
yes.
It's an interesting point, isn't it? So, a landowner is obviously, if they're they're diversifying into a new business venture, business stream, they're not necessarily a subject matter expert in that. So you offer them support in writing that business case, and
we ask them to get their own consultants, their own help, but we have input to that. So we bring our experience of what we've seen maybe with other clients in the same region, what the utilisation levels are, how quick it ramps up. But no, we're definitely there to support right the way through the project. As a direct lender, we're dependent on that facility being repaid in full. So it's in our interest to share the knowledge and support right the way through.
Yeah, and the no penalty early repayment, actually you get £1 back, which you can then lend to someone else, and the landowner gets to move on to the next venture.
Absolutely.
We all know farmers' income is quite unpredictable, or it certainly can be. How can they borrow funds but avoid tying their cash up? How does that sort of kind of work?
This is something we've been concentrating on the last few years, because farmers' cash flows are tight and they are unpredictable, more now than ever before. We've tried to work new products around the grant system. So if people are like technology grants that have been available, we've provided loan funds to the farmer where he can apply for the grant, obtain the grant, use our loan funds to buy the equipment. So in the grants provided part, we've provided the other part. So 100% has been funded without any need for put constraints on the farmer's cash flow. So we've tried to innovate products around the grants, and we're also looking to support, if people are going into SFI schemes, we can tailor the finance products around those schemes. So the result is that we don't want to be asking the customer to commit huge amounts of working capital to the new venture, because he needs to safeguard that working capital for unforeseen events that are coming around the corner.
Well, that's good. Potentially could imperil the whole venture, couldn't
Absolutely.
it? So you said as we started, this is almost a return to old-fashioned banking with, really know your customer and back the individual.
Yes.
And that absolutely resonates, and I'm sure many people here at LAMMA 25 are going to, prick up their ears when they hear that. Another area I just wanted to touch on is that, we've talked about new business ventures and diversification, and they are perhaps a little bit slower than that sort of sudden demand for cash that farms can generate. Approvals are notoriously slow in loans. They certainly are in my experience. Is there a way you can speed that up, or is this part of your business model about tailoring and supporting?
What we're finding is that we've already been able to speed up the process, partly having an employee on the ground collecting information, being part of the meetings with the farmer and his advisors. So we're there at the kitchen table when these business plans are being built. We've got a wider understanding of the farming business, where it's been, where it's trying to get to. So we've got all that information feeding into our process from a very early stage. And then our credit underwriters and our legal in-house expertise, we're sharing that advice as well. So we're finding we're getting to an approval within days rather than weeks, and often we're getting funding out the door within weeks rather than months. So the whole process is speeding up. We seem to have the right ingredients to speeding up the process at the moment.
That's
which
absolutely,
is good.
it is
Yeah.
good, and in everyone's interest, and it
Yeah.
makes your business more efficient as well,
Yeah.
as really supporting farmers, which is good. If we sort of come out a little bit from sort of the sort of tactical detail to a bit more strategic overview, I ask everyone this: what's the sort of biggest challenge do you think for farmers over the next 10 years, and how can they overcome it?
Well, there's challenges and opportunities. So with change, we're conscious of looking at both. I mean, the short-term challenges we see as cash flow for this year, the capping of BPS, particularly in England, the increase in minimum wage, the associated national insurance costs, the carbon tax on fertiliser, all these things are going to hit pretty hard and pretty quickly. So that's a short-term concern which we need to ride through, and we're trying to provide facilities in order to help with that short term. The medium term, it's the inheritance tax changes. A lot of family farms will need to clarify and put in place a succession plan. I think that will definitely help us being able to lend longer term funds. It's very hard from a lender's point of view to lend over 25 years on a farm mortgage when the borrower is the older generation. So it will help us, I think, by farmers clarifying their succession plans. And that may well be restructuring and using trusts and other vehicles, which we're all very familiar with in our industry. So I think there's a medium term, maybe restructure and longer and plan. In the long term, I think farms are great places to run various businesses. So I would say, if that was me, I'd be de-risking the business, taking in lots of smaller income streams, can all be based on the farm, but you're not then reliant on maybe traditional farm income. You can develop, and depending on location, where you are in the country, there are lots of small innovations that can happen. And we're big fans of all of that.
So clear message from Matthew, which is old-fashioned values and diversification are the way forward.